Hello everyone, happy Monday. Going long at 443 proved to be correct. So in today's video, we're going to take a look at what the next steps are for the market. Initially, I was leaning long down here because of the large tech stocks. So we're going to look at those large tech stocks today, how much more room there is to go. And now that we're at basically a major level of resistance here at this 618% fib, we're going to have to see at 449.34, we're going to have to see how much more room there is to the upside for the large tech stocks. We're also going to have to take a look at the IWM. We're also going to have to take a look at the dollar. So we're going to put it all together and we're going to make the best decisions moving forward. All right. So please make sure to like the video if you guys enjoy the content. Subscribe to the channel if you guys haven't already. And with that being said, let's get started with the video. All right, so number one, here is our good friend, the dollar. So the dollar is important because it has an inverse relationship to the market. It gives us an extra layer of what is going to happen on the stock market, basically. Okay, so we see a big red candle on the dollar, and we know that when the dollar is bearish and falling, then that is bullish for the stock market. And that is exactly what ended up happening today. The dollar has been red, which is one of the reasons why the market is green. Cool. Okay. We are getting close to a level of support on the dollar. Basically, always a prior level of resistance becomes support. So we need to see how much, this is a very major level of support that the dollar is very close to. So we need to see how much more room there is to go to the downside, but let's see. So I don't know if we're just going to automatically just capitulate lower, but now is, it's starting to become time where it's not as easy to just be, it's not as easy to just look at the dollar and be like, okay, yeah, we're going to pull back. At points like this, the dollar can easily just bounce back. Okay. So if the dollar does bounce, then that would be bearish for the market. So we're going to take it one day at a time. Right now, the dollar is getting close to a level of support. And yeah, we're just going to take it on face value, okay? So now that we know that the dollar is bearish, but getting close to a level of support, I want to take a look at the large tech stocks. All right, tech stocks. So tech stocks are, once again, the main reason why I was still bullish while the SPY was out of support, because the tech stocks were showing some strength, even though there was weakness in the S&P and the indices. So now, what we need to do is we need to try to gauge how much more room there is to the upside for these tech stocks. Okay, so Tesla, clearly big move. We're closed outside of the upper Bollinger Band. This, we could have another green day. Fine, okay? But right now, it's not extremely overextended to the upside. We could continue up on Tesla. We could have another green day easily. All right. Amazon, similar concept. It's closed way more outside of the upper level of the Bollinger Band. But in the past, when we have closed outside of the Bollinger Band on Amazon, it does continue out. It's not an automatic reason why it will just stop. So it could continue up the next day as well. Microsoft is a bit more stable. It could still continue up as well. Meta, similar concept. We're at a major level of resistance here on Facebook, but things look bullish. And then Apple has the news coming out with the event, but Apple's basically holding at support. Tesla, Microsoft, we have to take a look at Google as well. Similar to Microsoft, it's a bit more stable. So the large tech stocks still look good. If anything, there's at least one more day to the upside on Amazon and Tesla. And but the issue is that after a big 10% move on Tesla, it's not really safe to go long. So Tesla, we can stagnate a bit, maybe sell off a bit, but maybe that money will translate into the other tech stocks and rotate. So so basically zooming out, we're seeing strength out of the tech stocks. And that is obviously very important. So now I want to take a look at the indices. We're going to take a look at the S&P, the NASDAQ, and the IWM. Okay, first let's go ahead and take a look at the IWM. So remember, in yesterday's video I was saying that the IWM was starting to look like a really good long opportunity. It looked like it was about to bounce. It looked like it was going to, it should have showed some strength. And that is basically exactly what ended up happening today. We didn't make a new low on anything. And instead, the IWM just bounced because this was a real, it was showing way too much weakness on the daily. And it basically, it needed to show, it needed to bounce. This was way too much weakness. And going short here would just, it would be impossible for it to, you know, we still could make a new low, but down here is a much safer long opportunity. But yeah, I was just explaining that it was very overextended and we needed a bit of a bounce. So we got a bit of that today. So we are holding above 183, but it has major support at 181. So let's see how that plays out. But so far, the tech stocks are getting the most love. So as long as the IWM can remain above these levels of support, then everything's good. We just need to remain above support now. That's it. So taking that into consideration, the IWM is holding above support. Cool. Now let's take a look at the S&P and the NASDAQ. All right, so this is the NASDAQ, obviously clearly outperforming everything. This was a big day for the NASDAQ. We closed above 375 very comfortably. This is showing strength. Cool. And so this is showing strength. It's outperforming the IWM. Obviously, the IWM we just saw is really weak compared to where the NASDAQ is, right, relative. And then when we take a look at the S&P, it is a bit weaker than the NASDAQ, but it's stronger than the IWM. All of this makes sense, right? So now when we're taking a look at the S&P, I was saying that, you know, we needed to go long down here because the tech stocks are showing strength. And we were going to get at least 448, 449. That's exactly what happened. And this morning, I was also saying that basically this morning while we were trading, as soon as we opened, I was saying this would be the ideal place where all of the people that went long would take profit. And this would also be the place where people would start loading up on shorts. And that is exactly what ended up happening. We got some really early, we got some prevalent early morning weakness on the market. So now when we take a look at the daily, right, we are at this 618% fib at 449. Okay. And we're getting to this obviously level of resistance now. So I'm just going to repeat my thought process. We're currently, this is a bullish bounce, but we're now at a level of resistance. So now it's not as simple as just being long or short. Before, down here, it was much easier to just be blindingly bullish. When everybody starts to get offended that, oh, you want to be long here? Oh, you're dumb. That is the best opportunity to do the opposite of people. Because when people start to become offended by your position, it means that there's enough pain that would be caused to these people if the opposite happens. And every single time that ends up happening, you know, it's a good opportunity to inverse these emotional people. So, yeah, you know, that ended up working. But now it is difficult. Now it's legitimately getting a bit more difficult to make a decision, because we see that the dollar is getting close to a level of support and these tech stocks are getting close to levels of resistances. They showed a lot of strength already. So it's going to be really like heading into tomorrow. I don't really have like, you know, like let's just take a look at this. So basically the main level of resistance now is this gap that we need to basically fill on the S&P at 449.17 from September 5th, right? The high today was 448.77. So there is still this gap that needs to be filled right above. And this would be coinciding with this 618% fib. The other thing that I want to take a look at is if we just make a fib level from the recent highs on September 1st to the recent lows on September 7th, you can see how like important this 449 level is very, very important, because not only is it the 618% fib of the overall trend that we see here from July 27th to August 18th, it is also the 618% fib of this smaller move as well. So that is really, really interesting, and it just goes to show the importance of this level of resistance. So if we get a break above, it would only be caused by extreme buyers, and that would only happen if the tech stocks continues to show a lot of buyers. But this is a main level of resistance. And one more thing is this. So I'm not talking about in terms of day-to-day moves, all right? I'm talking about in terms of month to month horizons. So number one, let me go ahead and all right, so number one, we know that according to seasonality, we get a bit of a strong bounce in the middle of September. So we know that that's, according to seasonality, that's what happens. Now, I don't know if that is, I don't know if that's going to be possible, because this would just be extreme buyers. But if it does end up happening, that's fine. But this is the main level of resistance. But the other thing that I want you guys to understand is this setup. Let me just erase this now. This setup that we see right now on the S&P on a 1 minute time frame, this rarely ever breaks above this, and it only does break above after we make another low. So in terms of longer term plays, it is not ideal. So I can be wrong, but in terms of longer term plays, it is not ideal to be leaning long term long right now on the market. It is because as we get higher, the odds of the odds of us breaking above this is, it would depend on whether the dollar would just flatten out, and also we're not even accounting for what the CPI reading is going to be on Wednesday. But in terms of this, very rare do we get a bounce above this, and basically I really want to. So look. The main thing, zooming out, regardless of these mental gymnastics, the main thing zooming out is, if we do break above this, then anything above up here, these are opportunities to get into puts for at least 3 months out. I would be every time we break above on this sort of ugly bearish setup, loading up on shorts is the best. But right now as well, this is very rarely do we get a break above this high here, unless we first break down below here. So yeah, as we get here, the risk reward for going long is also very not, it's not good. So going long here, it's not the best opportunity to go long. It would have been, so we have support at 443, going long at 449 with a target of 453. What are you risking? What are you risking? 6 points to gain 4? That's not a good long opportunity. So yeah, it's getting difficult to start being long because of this major 449 level of resistance. So yeah, I just want to stress this out. It's also kind of early to start leaning, to be safe, to be very safe. You can start leaning into puts for 2 or 3 months out with a nice 10% stop loss, or a stop loss above 453. And it is what it is. You just trade the day-to-day, shorter term trends, intraday, do what you have to do. But that's my thought process. So and I hope this makes sense. It's kind of tough. It's not as easy as just saying, sometimes there's times where I'm just 100% bullish, 100% bullish. There's no ifs, ands, or buts. We have to be bullish. or okay, we are bearish all throughout the movements, we have to be bearish. Now is not one of those times. It's basically in an inflection point. We're basically in the middle of this very important level here, and just going long and leaning long-term long is just not really that safe. So yeah, I hope there's some thunder going on outside. I hope that didn't affect the mic or anything like that. But yeah, it sucks because I really wish I hate days like tomorrow, only because the larger time frame trend is not as easy to detect. So because this is still this is still technically a bear flag, right? And then this is also still technically a bear flag. But in the short term, on these last few days, we're bullish. But now that we're getting close to the level of resistance, you know, it just complicates things. So yeah, we're going to have to see how things play out tomorrow. We're only going to be entering into trades that are very good and safe. We're going to be playing light for everything this week as well. And yeah, man, taking it one day at a time. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And yeah, man, if there are more important things to consider or to look for, I'll definitely share that with you guys. But until next time, I love you guys. Take care. Have a good one. And I'll see you guys bright and early tomorrow morning. Thank you.